Yo guys, it's FFX. Welcome back to another video. Pretty much continuing from the previous few videos, going to more details based on time and everything, right? So today we're gonna be adding, or I'm gonna be providing a few more conditions that you need to get involved in a trade to increase your probabilities, right? We went from basic to intermediate to advanced. It's not really advanced, it's just that it's more additions or more components that support a specific narrative within price, right? So this is relative to each individual quarter, right? So therefore I personally trade London, but it applies even for New York. The difference is just the fact of time, right? For London we're using the Asia quarter, right? For New York we'd be using the London quarter, right? So yeah, first thing you need to identify when trading your selected session of your choice, right? You need to outline your range, your previous session range or your previous quarter range, which in my case would be all the way from midnight, and before that it's 6 p.m. So it's 6 p.m. to midnight, right? So what I identify is the low, which would be regarded as Asia, right? Asia sell side liquidity. Then we can place that at the bottom right like this, right? And then we can pretty much place it like that, right? So this move right here, this is what we're looking for, right? Specifically our drawn liquidity is up there, right? So but it's gonna make sense because it's all fixed on time and price, right? So therefore there's there's hindsight involved when it comes to teaching, but it's all time based because time never changes, right? Price delivers differently, but time never changes, if you understand. So as soon as the true day price opens, right? Let me just try using bar replay just for the benefits, right? Let me just try using bar replay. Currently right now we would mark out our range from midnight to 6, right? So this whole entire range is Q2, which is London, right? Then we can say London below like this. Then we can mark it out like this. We say London Q2. Q2 range, right? Then we'll place it inside like this, right? Okay, this is our dealing range, right? And the highest probability range, or the only range we focused on for this entire session, is our third quarter range, right? So this would be Q3. That's the dealing range we're focused on, right? And like the characteristics is, as soon as price opens, price needs to accumulate within its first quarter, right? Then for us to be going long, price needs to draw lower within our manipulation, right? And then our third quarter needs to be distributing higher prices, right? But like the rules are, price does not necessarily have to reach the Asia low sell side, right? It only respectfully needs to reach the equilibrium, the discount range, right? And let's just see how we identify that. First thing you do, you identify your Asia session high and low. It needs to be very specific to the peep, like that. So we would say this is Asia. This is, I don't know why it keeps doing that. This is Asia, buy side liquidity. It's up like this, right? So this is our dealing range. When price opens, generally you want to see it open in the premium range, and then you want to be selling in the discount range. So if I was looking for shorts within this range, I would require the opening to be below price, right? So what we do we would divide our range in half. Let me even remove that box and add the gen box. We would divide the range in half like this. So like right now, this is our premium, this is our discount. So within our discount, we're looking for longs, right? Our equilibrium range would be right there. So in simple terms, we want to be looking for long trades within below the equilibrium range, right? Hopefully that makes sense. The components is for us to be going long within here is that Q2 needs to sweep the first quarter range low or sell side per se, right? So we can divide our range again into quarters like this, right? Then the first quarter would be Q1, second one would be Q2, which is the third one would be Q3, the fourth one could be Q4, a continuation or reversal. That's its components. Let me just remove this. By the way, you can use this to help you identify your quarter ranges. I just sometimes like texting them out or sketching them out manually, right? So yeah, this is how we're looking to see price, right? So what we're looking for is simply something like this, and the price draws lower, right? Targets are lower, PDRA, then it starts moving higher, heading into Q3, right? So like, let's just see how the first quarter behaves. Goes higher, goes lower, goes higher. Okay. Let's see. Next candlestick opens, right? So our accumulation just ended. This is our accumulation range. We can work it out like this. We say Q1, right? Q1, right? That we can sketch this out like this just to remove noise. So in this case, what we'd be looking for is to see price within Q2 pretty much sweep Q1 sell side, right? Which would be pretty much this low like this. And then if it fails to do that, we'd be looking to see intraday price range on Q3, right? Meaning that we'd be looking for the same model on a lower time frame, right? So let's just mark this out like this. Then we'll mark this out as sell side. We'll say it's Q1 sell side liquidity. Let's see. We're still on the 5-minute time frame. Let's see, and then let me just remove this right here. Let's see. Price goes back. Okay, as soon as price closes like this, right, we completely disregarding this quarter range, and we're moving now into the second quarter range. This becomes our higher time frame manipulation range, right? So we'd mark this out as our range, and what we would need or we demand is for price within Q3 to sweep this range. And then we'll be looking to go long within the third quadrant range of Q3, within Q3, right? So right now we'd scale down to a lower time frame like this, right? Let me just fix that. Now the components is, or the fundamentals are, what we're looking for in higher time frame is what we are pretty much looking for right now, right? Whereby now we divide this range into quarters. We need price to form some form of an accumulation within intraday prices, right? This is a mixture of our market maker model, right? Where we have a range right here. So this would be Q1 range, right? Within the price data range within the third quarter, right? So right now we want to see Q2 manipulate lower, right? Like this. Like this, right? And then Q3 would be a distribution higher, and then Q4 a potential reversal or continuation, right? If that makes sense. But all our entries needs to be below the Asia equilibrium, meaning it needs to be in our discount range, right? So right now, let's just see how price books. When this candlestick opens, we update this Now this is our accumulation range, like this. So like right now, I would say this is Q1. Sell side liquidity. It has been swept within Q2, right? That's within Q3. So like right now, we want to see this quarter low swept, right? Let's see. Price goes lower, right? What is it potentially targeting? It's within our discount range, right? Let's see. Okay. Right now, our second quarter is closed. So therefore, right now we are within our distribution range. Let's remove this. We are within our distribution range, So what are we looking for? We want to see some form of displacement for higher prices, right? And then our initial target, we can remove all this. Our initial target would be the quarter range high, buy side, right? Like this. So that would be our drawn liquidity. So what we're looking for is some form of shift in market structure and maybe a potential drop back into a fair value gap, and then price targets the high, right? So like right now, let's just see what happens. Bearing in mind, we've also swept Asia sell side. We can even go to a higher time frame and see what is price potentially drawing to, or what was price drawing to within the Asia low, because price is gonna need something to bounce off, which can be some form of an inefficiency, which can be a fair value gap or an inversion fair value gap, right? So let's go to the 1 hour time frame. What do we see? Nothing's clearly visible, so we go into a lower time frame, which is the 15. What do we see? Below the Asia low, we have a fair value gap right here, which would be this one right there, like this. So that's where price was potentially drawing to, and if it goes through it, we can identify this range right here as our breaker, as our order block range. I just wouldn't be comfortable with it because it hasn't swept this candle's low, so I would completely disregard it. But as long as price doesn't close below the low of this, it can create a mohawk, but it shouldn't close below the low of this fair value gap, right? And to refine our fair value gap, we will refine it to this low right here, because price has revisited it multiple times. This is the only inefficiency range within price, right? So we can say this is our 15-minute fair value gap, right? That's supporting higher prices, so we believe price is gonna react off that, right? So like now, right now, we can go back into our 1 minute time frame for entries. We wait for displacements within Q3. The most obvious one right now would be this for me, which is a potential breaker. If price closes above this range, I would regard that as a shift in market structure. So now we are engineering bullishness, if that makes sense, right? So let's see. Price draws lower, closes below this range, so we can regard this right now as our new breaker, new potential breaker, order block turn breaker. When price closes above like this, right, the next candlestick that forms, that will be your execution, like this, right? Then your stop loss should be below the low or even below the fair value gap, just to cover for spread, because this is a 1 minute time frame profile, right? Your target would be the accumulation range Q1 high, if that makes sense. Would be something like this. One is 3.52, right? But now here's the rules. We are using market correlations to see if price is going to be willing to reach there. And what do I mean by that? We're using a correlating pair, which in this case, we would be using Nasdaq versus US 30, right? If I can remove all these annotations, this range right here is this range right here, with the benefits of hindsight, because we're using buy replay rate this side, right? If US 30 reaches buy side first, then we can kill the trade here, if that makes sense, because this could be potentially forming some form of an SMT divergence, right? Like this. So I usually cut my trades short if the pair or the asset class that I'm not in a trade in closes or manages to reach my target initially, right? And if you can pay attention, currently working on an indicator that might help with the annotations. Just do it like that. It does the annotations for you. If you can pay attention, accumulation, manipulation, right? Manipulation, distribution. X was a continuation, right? In this case, we got our breaker right here, right? And our initial target is buy side and a standard deviation above it, potentially. So we'll take our fib, place it above the high like this, right? Then the standard deviation above price, right? Like that. That would be our target, right? That would be our drawn liquidity. If it doesn't tap it, then you could manually close if price potentially goes back into the range, or you hold through all this time distortion, right? So right now, let's just see how price forms on NASDAQ. By the way, this indicator, I'm not going to be making it public. It's going to be exclusive for me, right? Something I'm working on for personal reasons. But if you want it, you can hit me up on Twitter, and then yeah, we can talk about it on Twitter. That's gonna be it. Yeah, Twitter's on like the description below. Yeah. But now, from here, we will be looking to see price yield higher, right? Potentially to that upper range. Let's see how price books. Price goes lower, starts reacting higher. Then right now, we have exited Q3. There could be a potential reversal within this range, right? And if you can notice, this high right there is this one. So Q4 right here, when it hit this high, that's when we'd exit our trade. So this would be potentially here. But if you want to be fancy, it would be this range above here, which is this. This is where price closes. All right, so let's see. Price goes higher, starts going. Let's see. See, as soon as price reaches this candle right here, closes, then you can exit your trade, because there's a very high chance this becomes an SMT divergence, right? Where one of them sweeps the high, the other one fails to, right? So that's how you can approach that, right? That's pretty much how I utilize my trades, because sometimes it will tend to like also be the six sister, meaning the lagging pair out of the all three asset classes, out of all three pairs, which is NASDAQ, US 30, and S&P 500. So one of them is about to be lagging, right? But right now, let's see. Price books, it draws lower. I usually do not want to, I never actually want to see this happen when I'm in a trade. But yeah. So we can cut this short and see how it ends. See, price just starts hovering, and if you can pay attention, US 30 was hovering higher above buy side. So this, in fact, was a true SMT divergence, and still currently is. So it's indicating some potential reversal, right? So, gonna go back in base and re-explain this in a very, very simple manner, right? Let's remove this, and this, right? Price accumulates, it moves higher, sweeps buy side, right? Then within Q2, it fails to sweep the accumulation high, right? This accumulation range. So therefore we use Q2 as our own accumulation, as a new accumulation range, and then head into Q3, which is this whole entire range from here to here. This whole entire range is Q3. This is our distribution range, right? We want to see its accumulation swept within the manipulation range, and then once Q1 is swept, this range is Q2. Let's just fix that. This is Q2. Sell side swept, price goes below the Asia range, low equilibrium, even sweeps sell side. It goes to a 15-minute fair value gap, reacts off it within Q3, creates a breaker, displacement, and then it moves higher. When it draws lower like this, what was it drawing back to? This order block right there. Right, if you can see that order block right there, then price yields higher, right? Creates a new potential breaker block right here. If you want to scale in, then an inefficiency range right here, which is this gap mixed with this fair value gap. That's an inefficiency. You scale in, seek higher prices, right? So hopefully this made sense, was insightful, enlightful, and all that. If you want the indicator, just hit me up on Twitter. I'll provide you that. I got like different versions for different time frames and different sessions. So it's for New York and London, and it's for different time frames too. But yeah, hopefully you enjoyed this video. Hit the like button and do all those nice things. And yeah, be safe.